Good morning, it's Jonathan Barrett with an update on this morning's AM debrief. We probably thought it prudent just to put together an update as the market actually opened, just so people get a bit of an understanding of what we're actually thinking on the coalface. Look, I guess in a snapshot, we have seen the market under quite a lot of pressure. The Dow, we know, was down 500 points. We know FTSE, the UK markets were down, the European markets were down, and so far our market's down so far 159 points. Or 3.77%. I guess the main thing that people are asking themselves is, do we start to buy, do we get back into the market? Look, it's, on a cautionary note, there are still concerns out over there. The debt concerns in Europe remain quite an issue, and as such, I think until we can really see what's happening from there, I think it's very hard to actually go back in. If you haven't hedged your portfolio or done sort of some form of hedging, I think the chances are you'll probably find that there is further to go in this market. The rough numbers that we had for the market is that for it to get down around about that 4,000 level, even that 3,950 level, and I'll tell you how we arrived at that number. I guess more importantly, the Dow, I guess, post GFC and where it is now, and I think this is quite important to understand. Our market is, from its high, 6,000, now at 4,000, is obviously 33% below those highs. And our economy has actually been quite strong. In contrast to that, the US market, if you think of where the high has been and where it is, still has a lot further to go, even to equal where Australia is at the moment. And I think it's that significant amount of stimulus that we've seen in the market that has actually caused that. A lot of people are now suspecting, and that will be unwound over time if the Fed doesn't continue to give us that stimulus. Now here's the chart. Now this is the interesting thing. If we take 33% off the high before the GFC occurred, then you get a bit of a sense of feel that that generally we should be a lot lower from here. This just to give you a bit better look at the chart there. I'll move that out here so you can see it. So you can see it. There's that trend line which it has broken, and I think that it can actually head quite a bit lower. There's the old high. That's 14,270. So if you just take 14,270 multiplied by 33%, then you come to a figure around about 9,560. That, in my mind, probably suggests where the Dow, if it were to equal where the Australian market is, given that we feel our economy is a lot stable, more stable than the US, should actually be. We have broken this trend line. This is a trend from the low. As such, it should quite happily correct down to these levels over time. So I wouldn't be in a hurry to rush back into the market at the moment. The other couple of things which it's worth noting at the moment is the debt concerns in Europe and also the debt concerns in China. The Chinese local government debt is encroaching 54% of total GDP. This is local debt only. Now, we feel that it's quite manageable at these levels, but if the market feels wind, that they haven't got the liquidity to restructure these loans, then there could be an issue. And I think that's one of the worries which we're going to highlight now, and but obviously let's see how that unfolds. But generally, still a bit of a concern. Just keep that just in case something comes up. The market might say, okay, debt concerns here in America alleviated, but only for a temporary thing. Temporary feel we actually feel. It's not a lot. Then we've got issues in Europe still, and now we're going to have issues in China, which is the engine room of growth for the global economy. As such, then you're going to expect some form of wind down. That to me is a little bit of a worry. Okay, so let's have a look now at the SPY. We've looked at the Dow. Where can our SPY actually trade to? Obviously, people that we still feel is quite weak. Look, that's where it is, 4,084. That's where obviously the first couple of hours of trading has seen it. The next levels of support we're on, 4,000, a break to 4,000, then we come into 3,600. That to me is the extent of any fall, if in fact we want to continue to see it going lower. The question is, should we be panicking? Should we be heading for the hills and cashing up? When we look at the commodity market, and I think it's important, this move has a silver lining to it. What's that silver lining? The silver lining is that asset prices are cheaper asset prices are coming to realistic levels that they can clear. Commodity prices are coming lower. If commodity prices continue to come lower, and just think in retrospect, crude at 100, crude at $85, that's a 15% saving on primary inputs. Multiply that through the complex of your base metals as well, and you've actually got a 15% saving on the cost of inputs. This is 15% that goes to the bottom line of the companies. And as such, that's got to be a good thing. So I think that whilst these markets remain weak, we can only feel that this is the right time to start to accumulate. Asset prices in the States will continue to trade lower. Commodity prices will probably continue to trade lower as well. But that to me only represents an opportunity where we will find asset markets at levels where we can structurally come in and start buying. There we can see there on the copper market, too high, coming back, broken through that trend. Copper can expect to trade down to $380, $400. Okay, so quite a structural decline there, which I'm actually looking for. So hold on to that. Okay, on the gold, gold's probably the next best one to look at. Why did gold come off? Interesting play. More turmoil out there in the world, it should go higher. The reason it didn't go high is that people turned around and said, well, look, we're cashing up. As a result of that, it's come under pressure. There is a little bit of divergence actually forming in the gold market. It reached the top end of this trend, it's failed. Expectations, I think, are that this can't be sustained for too long. So just keep an eye on gold for a correction. Any correction we will see, we'll probably see a little bit of a dip, but I still like the trade. The question is, how long do I have to hold on to it, and for how long? This is a high of importance now, 1682, and I think if anything, we actually come back down to that 1600. So let's see on that. Obviously that with silver, same sort of scenario. So as we can see, the market's correcting. It's going to continue to correct. Tonight sees a very important unemployment data in the States, changing non-farm payrolls, private payrolls, and manufacturing payrolls. Expect a good number. The ADP employment index came out last night. It was a little bit better than expected, and that's not a bad thing, about 114,000. That should actually translate to a bit of support to this market, which is something we probably anticipate. So whilst we actually see that support with the market, and if it is a good number, you'll probably see a little bit of a reversal. The key here is how long will this actually last for, this reversal, if economic numbers don't continue not to pick up in the States. That's the key. Buy the rumour, sell the fact. Let's see what happens. So they're the important ones there tonight. It is the unemployment. So I guess if anything, stay pretty close to the market. Chances are she's going to be volatile, so just be prepared for it. Don't trade as much as you normally would. Lower some of the position sizes. But I guess at the end of the day, we've got to question the resolve of the US economy to continue to move. And if in fact it will continue to come higher from these levels, or are we going to sink back into an economic malaise? I think the chances are, given we won't see a stimulus package, that we will slip back into slow growth, maybe even slip back into a recession. But I don't think that's a bad thing. In fact, I think we've weathered the storm, and I think loose to lower prices can only be healthier for the market going further into the future. Well, that's it from me for just a bit of an update during the day. Hope you have a great day. Good luck tonight, and we'll talk to you soon, and bye for now.